At the same time, the company released its earnings. What is it that you want that you don't like? These were great results. But yet, somehow, the market, quote unquote, got spooked. And it went down. Okay. What you need to understand is that something is going on and you're not part of it. You think that you understand what's going on because they're telling you what's going on. They ask these traders, oh, so what happens? Well, not traders, they were actually people, portfolio manager and such. So what's going on? Well, it would appear that we were expecting too much. Now, having said that, I will tell you that the market tends to like or not like surprises. So if it's surprise, like remember this thing on August 5th with 1,000 points and the fact that, whoa, what's going on in Japan with the liquidity situation? Boom, 1,000 points. That's how we roll. We don't know what happened, right? I mean, we were surprised by it. Here, on the other hand, they are kind of getting bored. They are kind of getting bored with Nvidia. Why? Well, because, it's no surprise. It's doing great and great again and great. Maybe they should be doing much better. So therefore, we don't like it. That is for your consumption. That is for the consumption of the uneducated or the unknowledgeable investor. It is not that simple. There are games that are being played there, long-term games having to do with portfolio management, about risk management, about taking money from your pocket and putting it bright people, very, very smart people. They have billion to $1 trillion interest to be managed, and it's not on that basis. It's the same thing when you are working with investors and the stock market. When they come around and they tell you, look, and Nvidia is not doing so well today. That's because people were disappointed in their earnings and thought it would be higher. Okay, so what happens? You sell, and guess who's doing the buying? They're probably doing the buying while you're on the way out. Okay? Why do I say that? Well, because portfolio decisions are not made on a name-by-name basis. Okay, these people don't make money because they've got a winner, right? And it's very simple. Take a look at, for example, why is it that portfolios, the general mutual funds that don't beat the S&P? Most of them don't, right? Because they are not allowed to have two positions in their portfolio. That's illegal. I mean, not illegal, but it's just way too much risk involved. How do you measure the risk? Well, don't worry about it. You let us know. Let us care about that. You don't need to understand risk. So they're not going to carry two names with Nvidia. Sure, the name has been up 3,000% in the past 3 years, but they're not allowed to carry such a position. So what happens? As this thing grows by 3,000%, they have to manage accordingly, meaning that they have either to sell some position or add more so that they are not solely dependent on a position. Right? So when they tell you that I am keeping in Nvidia in my book, you're thinking, oh, because you like the name. Well, no, it's more complicated than that. Their job as portfolio, I know I was doing it, as their job as portfolio manager is to manage the risk, not so much to look for winners. You need to manage, because you need to explain to your management, is this a risky bet that you're making? We're not going to just buy and hold it. Okay, it's one thing for me to take a short position on Nvidia stock, and we'll talk about this position, this index, this call for December 24, 155 call that is not doing so well, but hold your horses. But what we are here is really to explain to you what it is that they're doing in terms of what they are really doing and not telling you. They're not telling you the whole story, and they cannot tell you the whole story because it'd be too complicated. They'll tell you, I like it, I don't like it. I will sell it, I buy it. But that's not the only stock that they have. So you can't just talk in very simplistic term by just isolating the name. Is saying, I'm going to keep the name, even though the stock is down 7.8%. So you listen to this, you say, but I just bought the stock. I'm losing already after one day. Maybe I should sell it, but he's not selling. Well, he's not selling because he's got other positions. Now, of course, he would love for you to buy it and a bunch of other people to buy it to help, in order for him to help his position. Of course, but it's that you're playing pinnacles and he's playing chess, right? She's out there making moves, right? That are, like I said, 4-dimensional chess. Remember, the most successful investor of all time was Jim Simon, and he was a mathematician. He didn't care about EBITDA, cash flow, and all that stuff. And don't forget, every time that you open and you listen to all these people trying to tell you what to do, there's really a discussion about the risk and the credit risk, what the company does, the earnings, blah blah blah, and the actual price movement, and they have a tendency of putting them together, right? But obviously it doesn't work, right? Why not? Well, look at it. The company did great, but yet the stock went down. What's going on? You people crazy? No, there's other things involved. Plus, on top of that, all these people involved in these decisions, everything tends to be overblown, overreacted. So be careful about that, right? Don't be surprised. So let's take a look, for example, how we could play this game. Okay. Now the stock is up a lot, right? The P ratio is at 57. That's a high 50s. That's a high P ratio. What can we do? Well, I guess we could buy the stock and hope for, but now you're really hoping from, some incredible performance, continued incredible performance. Are we going to keep seeing that? Are we going to keep seeing strong and strong performance? I'm not so sure. Okay, so what we want to do is we want to take advantage of the volatility, because don't forget, September 18th is coming, right? So let's say you take a look at a December 24 155 call. Okay. The stock was down 7.8% over the past 3 days. The option is down 50%. It's multiplied by 7. The stock was down 6.3% today. The option is down around 42%, so around 7 times. Remember, I'm 7-time leverage here. By the time I get to December, this thing is going to be nothing. But if I have a stock price that increased to 154 from where it is today, I potentially double my my gain, right? And this is only what? We're in August, September. Well, it's more September, October, November, in 3 months. 3 months, 100%. 100% times 4 is 400%. Now, of course, for this to happen, the stock has got to move back up. But mark my words, it will. Right now, what they're doing is they are having you sell your position because you hear all those negative stories. Meanwhile, they're buying. They're buying and buying and buying. It's always the opposite that's happening. Remember, do not listen to what they tell you. Do the opposite. Of course, understand the risk that you're taking. I'm not saying, somebody goes up the stairs, you're going to throw yourself down the stairs. No, you need to understand. You need to get a grasp as to exactly is happening and what it is that you're buying. So you need to understand what you're getting into. If you're going to get an option, you have to understand that not only you need to know when the stock is going to go up and where, but for how quickly. Right? You have time and space against you. Okay? So you need, and then if you're going to buy the stock, then you need to understand what Nvidia does. Right? You need to read about it, understand it, always understand your investment. So what do you need to do at the end of the day? Well, you need to understand the players. What is it that they're doing? you will not know exactly what they are doing. That you don't understand, because they're not going to tell you. Okay? What else? Well, you need to understand your investment. What does that mean, understand your investment? It means that if it's the credit, you need to understand the credit. If you're playing with an option, you're not really trading the credit. What they're going to do next year, because next year that option is not there anymore. It disappears. On this case, you're just really playing the price risk, how the stock moves. Like I said, this thing is moving 7 times in the same way as the stock, so you have a lot more leverage. But what is moving the stock now? Well, earnings and all that. No, it's going to be earnings. They're going to disappear next year because this option is over. So what is moving the stock right now? Something is moving this option. It's moving alongside the stock. So you need to understand how the option behaves with the stock. So you need to understand the market. You need to understand the player. And then you need to understand how the option or the stock behaves on its own. Do not ask for prediction. Do not ask for recommendations. You think you're going to become a millionaire because somebody's giving you a stock? No, that is what they do to attract you. This is like the beehive. This is like the honey. They want to bring you in. This afternoon, I think it was CNBC, they were saying, oh, look at that. This is the 22nd year for Netflix. And guess what? If you had invested $1,000 then, it's worth $600,000 today. Do you think that these people on Wall Street, is that's what they're waiting for? They're looking for the next Netflix? No, they're not looking for it. They're looking to manage their books accordingly. So every time they should tell you a recommendation, they should explain to you that they own the stock and what size of what size of the portfolio, how much of the portfolio do they own. You need to be aware of that. You need to understand what it is that they're playing. Otherwise, you're playing pinnacles and they're playing 4-dimensional chess. And meanwhile, you're buying and selling and buying and selling. Now, of course, you could avoid this whole thing. You say, well, this is too complicated and it's too frustrating. What I'm going to do is I am simply going to buy and hold. Of course, they win again. Because the more money you put to work, the more money they make. And even if you lose money on your portfolio, they still make money. So what's the solution? Well, the solution, like everything else, you need to educate yourself. You need to understand what moves stocks. You need to understand the player. You need to buy when everyone else is selling. And you need to sell, and I mean everyone. And you need to sell when everyone is buying. And that is a difficult part. And that is a reason why not everybody is able to make it, because this is too complicated. It's like, kids at Christmas. Is Santa Claus coming? So you say, well, how come he's not coming to my house? Well, no, he did. You didn't see him, blah, blah, blah. He came to the chimney. We're going to tell you what you understand, what we think you could comprehend. At the same time, we don't want you to leave the house. We want you got to live with us for a while. Right? So at the end of the day, you got to believe in Santa Claus. O Perro Negro. Remember that movie with Tom Cruise? Perro Negro. He goes in the bar and he tells him about, what's going to happen. He says, well, Perro Negro, goes after the bad kids and Santa Claus goes after the good kids. Well, think about that for a second. That's exactly what's happening when they're talking to you. Because you don't understand what's happening. And it is something, unfortunately, you need to become more and more aware. Okay? So let's not panic. I think at the end of the day, this position is going to come back. Nvidia is going to come back. What they're doing, they're waiting for you to sell all your position. And then what they're going to do is, once you have sold your position that they bought, Then you're going to say, oh, wow. Then they're going to start, and then the market is going to move back up. And then you're going to say, oh, the Nvidia is back up. Okay, it's time to go back in. Or new people, maybe not you, but new people will come in and say, now's the time to Nvidia. And look at the wonderful they have earnings. And look at this, September 28th, September 18th. The Fed just lowered the rates. Okay, we're back to the races. Mark my words. See what happens.